What's going on? Welcome back to the channel. Today we're going to talk to you about Beyond Meat. I want to go over some expectations for this upcoming week, what might cause some volatility in the stock price, and go over everything else that you need to know. But first, make sure to hit that thumbs up, and with that, let's get right to it. So starting off, this upcoming week definitely is going to be a hot one because not only do we have a lot of big companies putting out their earnings, so this in among itself could really propel the broader market to kind of the next leg up. So for instance, we have Meta, Microsoft, Google, Apple, like everyone and their dog for the most part is putting out their earnings this week. So if the market's somewhat hesitant, and if let's say Apple and Amazon give very good future guidance, that's going to just propel things so much higher. Aside from that though, we do have the market fairly optimistic, especially following Friday's CPI data. That most likely is going to roll over into this upcoming week. But in addition to that, we do have on the Wednesday the interest rate decision, and it is fair to assume that we are going to be getting a 25 basis point cut. So that as well in among itself, even though largely it might already be priced into the market, still you could see a nice push higher because of that, just because of what that might mean as a kind of indirect domino effect. So you have that pretty big catalyst. You have Trump meeting with China as well. So that whole fear that's been looming over the market for the last two and a half weeks, that potentially could be off the table. And I think that most individuals feel that it will be, some deal will be struck, or potentially those tariffs that Trump did reiterate is going to be effective for November the 1st. Either that does get pushed back, or like I said, a deal does get done. Nonetheless though, market is going to be very optimistic and a lot of good opportunities for the market to run up like crazy. And so that means hypothetically a good buying opportunity for a lot of stocks. Beyond Meat is a unique circumstance only because I feel like the fundamentals aren't truly there. Some people might disagree with me on that, but a lot of people are getting in because of it being a squeeze play. So when it came to Friday after hours, a lot of the exchanges did update the new short interest. And so what they do is 2 times per month, they do update how many shares were shorted as of what they just reported October the 14th. So it's always delayed information. So what Ortex and a lot of other platforms do is they take this information, calculate it up to the present day. So ultimately, as of October the 14th, there was 51.83 million shares that is being shorted. That does work out to be 81.87% of the free float. Keep in mind, Ortex, that's kind of a little bit incorrect because they had the wrong kind of outstanding share count at that stage. So in theory, that kind of is more around that 15% range. But still, Ortex adjusting that does signal that there was about 13.97 million shares more than what was previously thought. And a lot of that is done through the dark pool. So the dark pool, the whole purpose of that is for things to stay anonymous. So this is how a lot of transactions can fly under the radar. I know a lot of people like to speculate. That's how naked shorting happens and whatever else. So just FYI on that. But aside from that though, most likely you will see a lot of volatility. And as I've mentioned even on my Friday video, that if it did close below this pivot point of 204, you could potentially see some consolidation to this 136. And in the beginning part of the week, we don't really have that much catalyst aside from the rollover optimism from CPI, which came out on Friday. So in my opinion, you could see, and this might be unpopular opinion, but you could see a push lower to that 136. And that might be a little bit more escalated because of shorts. So I feel like shorts really wouldn't do a lot of damage. So they might hit it very hard first thing on Monday, so Monday and Tuesday potentially, and then as we go into the Fed decision and a lot of companies putting out their earnings, this is where you could see a recovery. So when it comes down to it, I do feel between that 136 and roughly like 145 might be a good buying opportunity. Plus, if you kind of pop over here for a second, this is something I've brought up time and time again, and that is the market position. So right here, you can kind of see how there is a little bit of a gap right here. So you have some strong willing buyers up until pretty much that 204, and then it doesn't really, looks like, gets back to another good amount of willing buyers at about $1.45, $1.50. So in reality, I do feel that you might see a little bit of consolidation at that stage. Still, for those of individuals that got in at, like, let's say 50 cents, 60 cents, and whatever else, still doing pretty good. And that's, again, if it does recover. But I think all of this would be very speculative in nature and linked to more of the squeeze aspect of all that, not because of the fundamentals. And I've really hit home many times by saying that. So again, unpopular opinion. But one thing I do want to bring up though is I've seen a couple comments in previous videos and on social media, just people bringing up about these 13 Fs. And so I wanted to kind of talk about this because I don't always just want to read data. I want to try my best to educate as best as possible to a lot of individuals that might not actually know. So these 13 Fs are always delayed. So all of these right here are as of Q3. So that does conclude at the end of September. So just because it does show that Cedar Mountain advisors have one share, that doesn't mean that they bought it on October the 24th. That means that's just their disclosure date. On a side note, in my own experience, any entity showing one share, they are shorting, just on a side note, only because how it does work is it's kind of flawed, but technically all these 13 Fs, you have to disclose your long positions, but shorts, any short positions is voluntary. So you do not have to actually disclose that. With the new SEC transparency rule, which should be commencing, I think it's first half of 2026. Originally it was supposed to come out in 2023, but it keeps been getting pushed back. But based on the new SEC transparency rule, whether you are long or short, you will have to disclose your position. So anytime I've seen one share being purchased, that most likely is a entity that is also shorting behind the scenes. They just have the one share just to kind of show and put them on kind of the 13F. So a lot of these right here that have very, very low amounts, such as Clean Yield, 30 shares. You have Trade Winds, 20 shares, 25 shares, 10 shares. All of that, most likely all those entities are shorting. So if we can kind of just click on this, you can kind of see that there's only been one institution, or I guess ETF, that has disclosed voluntarily that they are shorting, and they are shorting 1,600 shares. So nothing too significant, if you ask me. But again, moral of the story is all these 13 Fs are delayed. So just on an FYI. But aside from all of that fun stuff though, on the actual kind of looking at the options, you do see some expectation for it to be roughly around that $4 to $5 range on the table going into this upcoming week. So bulls definitely are still fairly optimistic. Bears are anticipating for it to be sub kind of between $1 to $1.50. So they are anticipating more downside. So today or this upcoming week, you're going to definitely see a lot of volatility and you're going to see a lot of battles. When it comes down to their earnings, the implied move is almost 51%. So that is crazy stuff. So potentially even a dollar swing in either direction. My expectations of their earnings, like I said, fundamentally, I don't think things have really worked out for them. So I'm not really having too high of expectations for their earnings. Currently, earnings per share, negative 43 cents. And you do have 69.79 million for the revenue estimate. Over the last 90 days, you have 0 positive and 5 negative revisions to the earnings per share. Again, I don't really think that a lot of people are really getting into Beyond Meat because of the fundamentals, rather it just being a squeeze play. So in my opinion, anticipate a lot of volatility this week, potentially a retest of like that $1.30 to $1.50 range, and then potentially, because of all the crazy catalysts that we do have, you could see a nice push higher. But do your own due diligence. Beyond Meat has a mind of its own, and it most likely will continue to have a mind of its own. So let me know your thoughts on Beyond Meat. Don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. Give yourself a shout out if you have been buying or what you've been doing and where you realistically see things going for this week. Do you think that all hell is going to break loose, is going to go sub $1, or are we going to have a second breakout potential opportunity? So let me know your viewpoint. And then one final thing, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto. Put out daily day trades, numerous swing trades. Worthwhile to pop over there and check that out. With all that said, appreciate all of you watching.